Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for Tuesday evening. This is August 4th, 2020, just getting on about 7:50 p.m. Central Time. Sorry about not being able this morning to do your morning flash. I live in an area, one of the hottest areas in the city itself. I could walk to the Board of Trade from where I live. And to make a long story short, they are rewiring everything where I live, I guess for the 5G. And as they're doing it, when they're doing this, I lose my internet. Called up, I go to hotspots. You can't quite do broadcasting with the hotspot the way that I can some of the others. So I'm able to do my morning subscriber video, but getting the others out, no. Now the internet's back up. It's the end of the day. The workers must have gone home. I don't know, but it came back up. So I've been complaining, and if you know me, I complain. All right. I was expecting today in the stocks to be a day where the market was primarily on the defensive, and the reason is a large up day on a Monday often begets pressure on a Tuesday. Now, if the market was up big, that's downside pressure or trying for it. If it was down big, trying to rally back. That's pretty much what we're getting. The news of the day has to be the gold and silver exploding to the upside. Foreign currencies are jumping now against the dollar. We may have just seen the correction. I just saw Nancy Pelosi on PBS. And she was being interviewed, and I was watching. She's a rude woman. I mean, she's telling the newscaster she doesn't know what she's talking about, basically, and that's not quite true. The newscaster certainly does. She's well-renowned. I'm not going to get into names here. But to make a long story short, the Democrats want to hold the president to this $3 trillion, and the argument that she's making is the president gave $2 billion in tax breaks to the top 1% on the original deal, and the Democrats are owed. And that's what's needed for democracy in America. Okay, you take it the rest of the way. I'm not a politician. But it sounds to me like the two sides with all that argument are going to get closer. See, once the words come out what it really is, they get closer. And with an election coming, you can't have the Democrats saying, we didn't give you anything, so they're going to get something. The Republicans have to have something to give. And the president on his own can still give the payroll tax, and he can still stop evictions for certain ways. He has the presidential power to do so. Expect it. That's what gold and silver, I think, are seeing. They're saying, you know, what's $1 trillion here, $1 trillion there, or $3 more trillion? Eventually, somebody's got to pay this back. And that's what the market seems to be dealing with. So when you look at the market, amazing as it is, you had to have guts of steel, but somebody bought here and just said, okay, each one of these deep breaks I'm buying. You realize where you're at right now at 32.99. We are less than 100 points away on a closing basis from the all-time high of the market. COVID, situation, economy bleak, spending like there's no tomorrow, market's all the way back up there. And this is the S&P, the NASDAQ's already at the new highs. And by the way, that's another thing that's going on. The fact that the NASDAQ is there, this is almost like the Industrial Revolution. You've got to think these ways. In the Industrial Revolution, it was the industrial stocks that came alive. COVID has been the catalyst that has sent the tech stocks on their way, and they're not turning back. That doesn't mean there won't be corrections. This was a turn for society. The well-to-do societies, the Europeans as a group, the Japanese, the South Koreans, the US, the Canadians, I can go on and on. The G10 economies, let's call it that way. What do I think of that? I think their lives have changed with technology. But you can see what the market is doing here. You can see the chart action. Higher lows, higher highs. That's all I care about. That's an uptrend at a new high for this move in this contract. What has the market held almost religiously? Challenges back against this 18-day average. Bullish. Where's the resistance? The upper Bollinger Band. What do I think the pros will do? I think that breaks towards that 18-day average are going to find support. And something else. You can't count where we're at tonight for the slow stochastic. So let's go back to Tuesday. Both numbers over 80. Both over 80 the day before, not the day before. Tomorrow's very important. If you can get an embedded reading, it tells me that on the pullbacks, what to expect, and it might not even carry on a pullback back to that number. It might be a shallower pullback because of that reading. You're not even close to it in the NASDAQ. NASDAQ's got its own life. It's just overbought, runs up to the Bollinger Band, and does what it should. It runs out of momentum. But what it does is it doesn't fall apart. And that gives the other indices in a bull market a chance to say, hey, don't leave me behind, here I come. And that's what you do. So a true bull market, one part draws on the other, and everything comes up. And that's what's been going on. The Dow, I think, would have broken on its own, these industrial stocks with all the COVID that's gone on. But instead of breaking, it's total sideways action because the other indices are doing better. You get crossovers on that. Are we trending? We are not. You have a higher high, a lower low. There's nothing to do in that chart as I see it. Which market's been the weakest? Well, it's been a mixture of the Dow and the Russell. And this market's also got pretty much the same pattern, a higher high and lower low. I've repeatedly said this market's paying attention to the 200-day average after it got over it for support. You then got a crossover of the 18-day average. And as you can see, the market's trying to make those higher highs. That's what you expect on a bullish crossover. What about this reading on the stochastics? Let's get rid of Wednesday night. Both numbers over 80 and over 80? No. Got a 79. So tomorrow in those two indices now, are we going to embed? I'd love to see that. In the VIX, I expect that on another break to the lower Bollinger Band, it's 2160 now, it'll be lower tomorrow, just the way that the math works on it. I expect to see the pros write some puts. But here's what's going on. We have taken the market from the 50 to 80 level up here, brought it down, had one run back into the 30s, bringing it down. We'll eventually get another spike. It shouldn't take out these spikes back here, and the market's settling back into where it had been. It's only double the range that it had last year, and I say that facetiously, but I mean what I'm saying at the same time. You know, last year we were trading between 10 and 20. Now we're trading between 20 and 25, 30. That's what I'm getting at. In the bond market, the market's accepting the fact the Fed's not even thinking about raising interest rates, and that more money's coming into the economies, and that people will keep buying this up because there's nowhere else to go with their money. It's sending gold to all-time heights, and 30-year yields, they're suddenly attractive and the market's getting bought. You wouldn't think so, just over a point, but that's what they're doing. 10-year yield, this is an all-time high. 0.52, 0.517 yield, breaking out, running the Bollinger Band. Embedded reading, everything's bullish on the chart. Until you lose that embedded reading, I say the pros keep buying it. Now in the dollar index, I'm waiting for this market now. It's just opening, and guess what it's doing? This is so important. What we've got in the market is it lost the embedded reading today. The only time you can lose the embedded reading and get it back is the very next day. It's got to do it right away. Guess what it's doing? It's getting it back. It's signaling, if it stays like this or lower, that was the rally. It's back to embedded, and in my opinion, it wants to head down maybe to those lows again. Tomorrow's going to be so important. In fact, through the night's important. I think the bears are taking control right now as I'm talking to you. I think they'll be living by the tick on this. They don't want to see that lose the embedded reading. Then you have a different game. The euro lost its reading. See this? Let me show you the difference. Here's the euro, and let's get it. Right here. You lose the reading. The red line's got a 79, and that reading was on Monday. Tuesday, it did not get it back. So it cannot re-embed without going through the whole process again. But is this market telling the dollar what to do, or is the dollar telling these what to do? I think it's the dollar telling you what these are going to do. And the market is suddenly back into an area here. It's staying overbought. It's not trying to re-embed. Difficult to come in. It's the dollar that's an easier play than the euro. I know it sounds to some out of place, but that's what I think. In the Japanese yen, we have corrected. So we've gotten, when we lost that embedded reading, we've gotten down where both numbers are now under 70. They're no longer overbought. The pattern is neutral, a higher high and lower low. What about Bitcoin? Well, Bitcoin has been acting very good overall. You know, up here at the upper Bollinger Band, it's problematic. We know that. It pulled back under it, trying to find its legs. It's still embedded. Until it loses it, what can I tell you? It still has, when it got up to this 11,800, it's gone up almost 300% since December. That's not a bad number. The difference between Oct Brent and WTI, as long as you stay over this 18-day average, that line in the sand, I contend with you, and I've said this before, that gives the upside difference benefit to Brent. But, just come with me. Just the other day, you and I were here. And as we came in and I said, I've switched gears to the October from the Septembers, this just days ago, and I said, that's too high, this 300. I wouldn't be surprised if it's just part of the switch as you're moving over, and you'll probably get back towards that 18. That's exactly what this market has done. Going into the energies, you're in what I call a pipe. Think of this as a pipe. When the action starts narrowing in and just keeps going sideways, there is a spring. The spring is called price, and you are just ratcheting. The spring isn't going to break. The pipe is going to break, and the question is the lid going to blow off that way or this way? That's what you're dealing with. Same thing in the WTI. You've got this sideways action. And the day before, I had put out a sell recommendation in this. My head must have been off because I don't believe you trade in the pipes. SL. It's hard to believe last night I told my clients to come out on the one break they had last night. They got it. And I said, I made a mistake. And you do. And I didn't check my list. Remember I say here, you got to check your list? Check that list. You have to have a checklist. I don't know what I saw. Do we all make mistakes? For sure. Nobody's perfect. Saw it. I will have losing trades no matter what. I don't want to have stupid losing trades, and trading in that pipe to me doesn't make sense. Gasoline's in that pipe. Very dangerous. I see the bearishness of it. I see it stuck at the 18-day average. So what? It's not able to follow through. And as I said, price is spinning in here. I don't know what's going to kick in this market. I don't want to be the one to find out. Let somebody else do it. I'll come in after the fact. Nat gas, as I told you, the hot weather that's returning, it kicked this market up rather dramatically. I don't believe it's this storm that's hitting the East Coast. I think it's what's coming into the center of the country, and we'll see. But in its own way, the market broke out over these highs and just kept going. Okay, it's a funny time of the year for nat gas anyways. Let it finish its thing. You know, I go for you during the morning at 5:40 in the morning and record a video. Now, when I say I go for it, I wake up about 4 and I start reading like a madman. What is going on in China, Japan, the Koreas? I want to know. Then from there, I'm reading from the Asian news, I move over to Europe. And what I do with that is in the morning, I first write a report with big headlines. In my morning subscriber video, the first thing I do after I start it and say, hey, today is Thursday, October or August 5th for tomorrow, I will show you the reports coming out today, the economic news that hit the Asian economies, the European, the events of the day, what we should be looking for. I'm doing that at 5:40 in the morning. You have this by 6:30. Between the editing and all that I do, you get it. I'm not in those videos. I'm recording my computer screen. I'm going to review 40 charts. I'm going to cover everything from the stock indices, interest rates, foreign currency markets. We're going to cover the meat markets, the grain markets, the soft markets, the energy markets, and of course, the metal markets. They're labeled for you so you can just go to the area you want in the video as well. It all plays. It's pretty simple. It is the price just about of a large Starbucks coffee. Not too much difference. That coffee from Starbucks gives you 15 minutes of enjoyment. I'm going to give you 30 days of enjoyment. There's a big difference. Give it a try. Keeps everything else going. Go to our website under the word research. You'll see it there. I'm Ira. You have